Hello guys, welcome back to another lovely trading video. In this one we're going to be doing analysis on AbbVie. Haven't actually looked at this stock for ages, but it was asked in the comments by Driven Latino, comment on screen now, to do some analysis on this. So we will get straight into it, and as always we go to the daily chart. Is there any gaps that need to be filled, because most likely these can be used as targets. And looking straight at it, we can see about a year ago there was a gap created from around 183 down to around 181. So again, it hasn't been filled in all this time and is a far way away, so not something I would be really using as a profit target, but more of a sense keep it there as a rough guidance. If there's a market correction or something like that, or some reason bad news on AbbVie to make it pull back quite heavily, this will most likely be a bounce area and somewhere you may be looking to trade. But for now, it's not going to provide much significance. Again, another gap to be filled around 91 to 87. This one's a bit more achievable, but again, I think it would require some news or a market correction, or market pullback, should I say, to kind of get back to that level, as it is quite far away. So we'll be looking more at kind of these closer levels, and as it hasn't really moved much in the last 9 months, it's been consolidating more. These are probably more of key levels to be using. But looking at this, we can see any gaps that there were have been filled. So we don't really have any gap fills to be looking at that are within a close area. So instead we will go over to the second page of charts, which is standard deviations, and we can start getting price targets off this. And we can see that AbbVie on both the daily and the 4 hour is below the first deviation. So what that means is basically the stock's more oversold, you can think of it as, and is considered more of a good or lower risk buying opportunity. And what we can see right now is that on the 4 hour, what you would expect is it broke through the first deviation and bounced off the second. You expect to see that all the time, not always back to the next deviation, but you expect to see it bounce. That's why you'll see, if you watch any other analysis, that I say these are good bounce areas because they provide it. You may not always want, if you're buying it this side, you can go long on it more as a swing trade because they tend to have larger pushes. However, for example, let's say AbbVie was up here at the second deviation and pulled back to this first deviation, then you probably don't want to be swing trading and instead looking at short-term long plays. So that might just be like a quick day trader or something like that. But now straight back into kind of what we were talking about. AbbVie has broken through, tapped off the second deviation on the 4 hour, and has come back to kind of retest this first deviation. And you'll see that this retest is kind of the same level on both the daily and the 4 hour, which is kind of a bad thing if you're maybe looking to go long, because it's going to make it a lot more of a heavy resistance to break through. And that's why we started to see it's come back, retested it, and it looks like it's going to fail. Obviously it closed red on that day it tried it, has started to kind of claw back some of those some of that redness, but it's still not breaking through. So that's going to be the key thing before we can look to do anything with this stock, is really you're going to be breaking for kind of a low, so kind of a break of 105, or you're going to be waiting for a close above the first deviation on whatever one's higher. So in this case, the first deviation on the 4 hour is higher at around $111. So you want to see this stock closing above kind of $111 if you're looking to get long on it, because that would kind of be your confirmation that it's starting to turn into an uptrend. But for right now, we are kind of more bearish on the stock because it does look like it's going to fail this bounce. So where would we be bearish to? Kind of 106 would be where we would start looking at some profits, just because you don't know if it's going to retest and bounce off on the second try. But you could also have a lower down target, and I do think would be the kind of overall reversal zone if it continues down, and that would be around $101 to $102. Why do I say this is going to be the reversal zone? Two main reasons. Third deviation on the 4 hour, second deviation on the daily. When you have two deviations very close together, they act as a really strong buying zone, because you need to think about it as well. Standard deviation tends to be what a lot of high frequency traders and algorithms tend to trade off. Not so much maybe the exact channels, but they use that kind of data because that's how they find kind of good deals. I mean, if a stock, let's say this is a year of data, if a stock's down at the third deviation, that means barely any of the stock throughout that year is down at that kind of level. So if a stock's down there and there's not really any bad news surrounding it, then it's a good indication that it will reverse from there, and it's considered a low risk buying opportunity. So that kind of 101 to 102 would be that key reversal area, and if it comes into there, definitely a good idea to get long. But other than that, that would be kind of our key area we'll be looking now. If you are looking to get long, where would our lot profit area to kind of be? And that would kind of be statistical mean, so around 115 to 119 and 120, because that's also the first deviation. I think it would be pushing your luck to kind of wait for it to break through. Reason I say that is because the stock has not moved really at all in the last 9 months. I mean, if we go from this high to the other high, I mean, it moved 10%, which obviously is still a lot thinking in a normal equities term, but in this kind of market, it's really not. During pandemics, stocks are moving like crazy, so that kind of move, you would be looking for something bigger, especially in a 9-month span, at least in how the market's kind of trading right now. I mean, you could probably even go into something, let's say JPM, may not be the best example, but probably is kind of moving 18% for that kind of one, or 18-19%, and that's a kind of well, obviously a financial bank. They don't move as much as something like AbbVie, which should be moving more because it's well, it should be. So that's the only big thing to be watching out on AbbVie, is it doesn't seem to be a big mover in this kind of market, so we don't want to be making extreme targets. So that's why we say we're looking for kind of less extreme targets, you know, like things on Tesla. We usually say we'll be looking for a higher target than just a first deviation. But on a stock like this, which doesn't seem to have much movement, you don't want to be pushing your luck, and instead be locking in profits where it seems reasonable. And on this stock, it does seem more reasonable to be locking in at that first deviation. So those are our key targets. Everything on the screen now would be kind of key targets. We will also place the other ones just in case you want to know kind of where these levels are. And again, these can be used as short areas, lock-in profit areas, kind of however you trade, you can use these levels in some way or another. So we'll quickly plot all these just in case you want reference. But really, that is it. As I said obviously before, we kind of got the key price target of 115 to 120 would be kind of our key lock-in profits to the upside. Where is good buying zone? 106 wouldn't get in the full size, but will probably provide a small bounce opportunity, but a good, probably low risk, long area, and probably something I would trade myself would be down at that 101.50. So hope you enjoyed the video, hope to see you in the next one, and that's it. Peace.